So, welcome, expert investors. I have Mr. Scott Dillingham, an old friend and colleague. Scott and I have probably done hundreds of deals together. Scott is a mortgage broker here in Canada, actually based in Windsor, but we've done hundreds of deals across Southern Ontario, from Windsor to Hamilton to Barrie to Kitchener to Toronto, all over the place. And you know, so in the last few years, Scott has kind of reorganized his business and started his own show there called Lend City, right, Scott?
That's right. That's right, Paul.
Lend City. And so Scott's been doing the typical mortgage broker game, but in recent years, we've been talking, and he's been doing a lot of work in the US. And I just learned Scott is a dual citizen, so which helps a lot if you're doing being a mortgage broker in the US. So he has some very, very interesting options for US investing, and more importantly, US financing. And I wanted to have this conversation because the whole topic of US investing is exciting and everybody wants to talk about it. But we all end up hitting this brick wall of how do we get financing? It doesn't look pretty. Rates are higher, 40% down. And from our conversation, Scott seems to have some much better options. So I wanted to bring the conversation to you. So, Scott, I'm just going to kind of review this, and then I'll let you kind of go with it. So, on a typical deal, the lender is going to use a debt coverage ratio formula to approve the deal, meaning they're looking at the income of the property and not your personal ability to qualify. Is that correct?
Exactly right. Yeah.
Okay, perfect. And then, that could also be, here, if we were looking at commercial properties, they do the same thing. So it's almost like a commercial property qualification, but you can use for smaller properties. And because it's debt coverage ratio, that means there's probably no limits on the number of properties you could have, or the size. Is that also correct?
Correct. Yeah. It's every lender has their own, like, the specifics of it. Every lender does have their own cap. So for an example, one lender will do 15, but then what they do over there that they don't do here is they just sell off the debt and it wipes the slate clean and you can do another 15 right away. So it's really cool. So ultimately it's unlimited. Yeah.
You got to love the US for some of these things, eh? Uh, So typically you're doing a 70% loan to value, but you can go up to 75% loan to value, or 20, or typically 30% down. Is that right?
Yeah, so to get sort of the best pricing, you want to have the 30% down. We have 25s down, and we even have lenders that if you establish a Canadian credit, they'll do as low as 15% down. And sorry,
Wow.
but you have to have a good credit score in the States and all the other stuff, right, built up. But primarily, yeah, we're seeing 30% down across the board for best pricing.
Okay, so it's safe to assume 30% down. So with the best pricing, that's going to get you typically, and there's so many variables involved. So I'll use a range of somewhere in the low sixes to about 7% in terms of interest rates.
For the lowest, yeah, absolutely.
All right. So that already sounds really good and better than what I've already seen. I know we saw some stuff at 40% down just to get into sixes, and that was pretty painful. Like it starts to not make sense in that 40% range. And if you can do safely 30% down, it just makes the deals work so much better. It's more efficient with your capital.
Yeah.
So, and this was a big one for me, of course, as a realtor and an investor. I want to know how long is it going to take to get approved. So you're saying it can be as quick as 48 hours, and if it takes a little longer, realistically, what is it, about a week or so?
Yeah, like not even. So you'll have your approval letter from the lender within 48 hours. That is the current turnaround time. The longest I've seen it is 3 days. So it's not
Wow.
much. And then obviously appraisals and that type of thing, depending on what you're doing on the property, right? If you're flipping it, then we need quotes. But if you're buying and holding, then yeah, we just need the appraisal with market rents.
Perfect. So, I mean, we're going to talk about all that. I think what we're going to do, Scott, we're going to talk about this on a whole masterclass. So we're going to spend, an hour or so, doing some presentations. I think if you can, we'll show some deals that you've done in the past, or maybe some ones that are available to give people some perspective,
Yeah,
and then we go through some Q&A at the end. I think that'll be a great value to people. So we're going to do this May 2nd at 7:30 p.m. Is that right?
yep, that's perfect.
All right. And then closings as fast as 14 days, provided that your funds are already in the US, because the lender needs to see the funds in there for at least 30 days or so. Is that right?
Correct.
Okay, good. So I mean, this is important to me, and why I wanted to cover this first is that kind of that kind of financing structure makes sense. Like you can go out there as a business person or as a real estate investor, say, I have quality financing. Let me see if I can find some quality properties to match them up with, and you don't feel like you're, sacrificing putting 40% down or taking some crazy high interest rate. I think it really helps the business prospects here. So now you're underwriting a lot of these deals now in the US. Where are you seeing it most? Is it just Florida or Texas? Like what do you what are
Yeah.
the few places?
Couple different strategies that people are doing. So we're really seeing a lot in Ohio. Ohio is the area where you go for
Really?
housing with good cash flow, like as a ratio, right? The rent to purchase price income. The ratio works really well in Ohio. Obviously, Florida, right? We're seeing tons of Airbnbs, condo hotels, that type of thing in Florida. And then Texas, we're seeing more of the luxury style or midterm rental market. And we'll
Mm,
elaborate. I don't want to ruin that, but think of Airbnb with furnished, executive rentals for business people. Think of that.
mm,
That's going on.
mm. Okay, midterm rentals for business people in Texas. So that's what you're seeing the most of. So higher cash flow in Ohio, typical Florida vacation rental in Florida, and then in Texas is sort of in the middle with the midterm kind of rental thing. Cool. And the lenders are okay with all of these strategies.
All of it. Yeah.
And they'll qualify like the short-term rental income or midterm rental income.
Yeah. So what they want to see, right? If you're buying an existing Airbnb, let's say, then they'll ask the seller to provide 1 year of transaction history from Vrbo or Airbnb, and they'll use that. I even had them, a client was buying a single family home, but converting it to Airbnb, and they used the Airbnb income from Canada because the client had a track record, and they use that to help them to qualify. So that's cool. But if the property has no history, no provable history in Canada, then they'll just use market rents as a regular rental.
Okay, that's fair. That's fair. Okay. So obviously there's demand for this type of US style investing and more importantly, the US financing because no one's buying cash. Everyone's going to use financing, right?
Some people are tapping into their equity in Canada, refinancing properties, lines of credit, maybe selling. I don't necessarily think someone should do that. I mean, everybody has their own structure, but I mean, Canada is still a great place, right? So it's not like we're getting rid of Canada, but we're just saying, let's have more options, right? Let's go to the
Mm.
States as well as Canada. So that's what this is about.
Yeah, I kind of see it as like, I obviously I know it's not another province, but it's another avenue I can invest in. If all my eggs are in the Ontario basket and I have a few $1 million of equity, if I refinance or sell a few properties and unlock two, three, four, 500,000, I might look to another province in Canada, or I might look to this US to provide a better return that I can get at home. And if I can do that, why wouldn't I? So that's kind of my take on it. Is that what you're seeing with other investors?
That's absolutely what I'm seeing. You're seeing that, and then it's a little bit political too, because you're seeing investors beyond the numbers, right? They're looking for no tribunal issues, no rent control.
Mm,
So they're looking at it from that point of view, plus the return.
got it. Yeah, and that's fair too. We won't go there on at least on this intro call. And you sent me an example, so I'm just going to do a quick screen share,
Yeah,
just so people know that just for fun, just a touch on what we're looking at. Let me pull this up here.
yeah. Now
So
this,
this is just an eightplex, right, Scott?
yeah, it's just an eightplex. It's not in the hot markets that we discussed. But I know a realtor there, and I'm working on this, file for his client. So this is, yeah. So it's actually considered two fourplexes, but they're selling them as a bundle. So there's the rent. So this property, guys, it DCR'd so well that the lender,
But I think this vision.
sorry.
I was going to say, people, this is what I look at, think about multifamily in the US. This is kind of what I envision. So, but yeah, go ahead. I don't want to interrupt you. You were saying this property, the numbers work so well, or DCR so well
Yeah,
that,
so well that I was able to get the client the best rate with 20% down. So normally,
wow.
like we said at the beginning, it'd be 30, but this investor, so they do, like, if the property's strong, they'll actually offer a Canadian a smaller down payment with attractive rates, but it's all specific to the property.
Yeah, that's interesting. Yeah. So I think this is going to be an exciting call, Scott. I want to open up this option selfishly for me, but I want everybody else to kind of get the opportunity also. So I appreciate you doing this. It's going to be May 2nd, 7:30. We're going to talk about US investing, most importantly, US financing, and we're going to have some real life examples of opportunities that have been done, hopefully some ones that are available. And it's going to be a great way to learn. And Scott is a great resource for you to ask your questions. Anything you want to add, Scott?
No, but you know what I would be curious about? I know that through Rockstar, you know, there's a lot of the new developments in Florida and stuff that you guys are working on. I think it'd be cool if you brought one of those examples into the webinar and we'll actually break down what the lending would look like. And I'll show you how we process it to get the client's exact rate, what their lending options are and all that. It'd be great to do that.
You know what, Scott? Since you called that out, I'm gonna take you up on that. Good for you. Let's do it. All right, so let's leave it like that. May 2nd, 7:30. Look out for the emails. It'll be recorded, but you got to register, or else you're not going to get the recording. Talk soon, everyone.
Thanks, Paul.